Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Juan Carlos Artigas from the World Gold Council, Director of Research. Juan Carlos, thanks again for coming by.
Thank you so much for having me, Mike.
Now, you guys at the Gold Council, you just came out recently with your new gold review, Gold Investor, your report, your quarterly report. Let's talk about some of the trends in there. I think you highlighted three specific areas where gold was really a little bit different than other alternative assets. And you also talked a lot about the distinction between outperformance and diversification. I think a lot of investors may not even understand that. So why don't we start with that?
Absolutely, no, and this is really key. I mean, we were trying to explore gold in the context of alternative assets, right? So if you think about stocks and bonds, anything that is not a stock or a bond is going to be an alternative. So by default, you would think that gold, or you think that gold, yeah, exactly.
Equity.
So real estate, commodities, right? What we find is that gold brings something new to the table. So even for investors who have exposure to hedge funds, private equity, and commodities and real estate, considering gold as part of the allocation can bring very positive results. And as you were saying, it really has to do with two things: partly outperformance, but more than anything, diversification. Many alternative assets bring outperformance to portfolios, and that's why investors like them. I mean,
right.
they want to get better risk-adjusted returns, and they do get good results from investing in many of these strategies. However, in terms of diversification, alternative assets, well, in particular hedge funds, real estate, and private equity, and to some extent commodities, have a higher correlation to stocks, in part because they are more linked not only to the stock market but also to the business cycle.
Right.
When it comes to gold, gold is truly the one alternative asset that has the lowest consistent correlation to the stock market, and more than anything, actually, it keeps that correlation through periods of systemic risk, which is particularly important when it comes to balancing risk in a portfolio.
Now, the other area that you spoke about was the fact that gold, many people consider gold a commodity, and it's even included in a lot of commodity funds, but it acts most of the time more like a currency. So you get the dual benefit of having some commodity exposure, but you also have that currency effect, which is not, again, not correlated to the commodities.
Absolutely, and that lack of correlation comes from the fact that gold is less exposed to the business cycle. In many respects, a good portion of gold demand is counter-cyclical. So, as you were saying, many people consider gold in the context of commodities. However,
they call it a currency too. I mean, gold is often called
a currency. But when you look at the characteristics, it does behave much more as a currency. So thinking of gold as a currency is not really too outlandish. It's actually more close to what in reality gold behaves like. And part of the reason is in terms of demand and supply. You can see from the demand side, on one hand, you do have consumption, whether it is jewelry or applications in technology and other industrial uses.
Which jewelry is very, very important. It's the biggest demand factor, isn't it?
It is the largest share of demand for sure. But you also have the investment side of gold. So
which
gold
is growing.
Exactly, which is, well, and it's also an important and consistent part of the world, whether it is in the West or the East. But you can see that the consumption side is going to be pro-cyclical, but the investment side is more counter-cyclical, right? And you don't have that really often in any asset. So that's one side. On the other side, in terms of the production, not only gold production is very well diversified in terms of the region of production, so it's not concentrated in a particular region. You also have gold already above the ground that can come back into the market, right? And it's not really consumed. It's not like oil that once it's used, you cannot, use it again, or agriculturals or any other type of commodity. It is really an asset that you can use and use again, and that part of the characteristic of gold in terms of its permanency in the system, it's also one of the important characteristics of a currency. It's something that you can rely on, something that you can get your hands around, and also because it's a large market.
That's a great point, by the way.
And because it's a large market, it has a lot of liquidity, so investors can access it fairly consistently.
I mean, that's almost a counter argument to those who would say, well, every ounce of gold that has ever been mined in the history of the world is still out there. So that would be a bearish argument. But then you could say, yes, but that's a good thing, because that gives it its characteristic as a currency. It's there, it's accessible when you need it, correct?
Absolutely. No, and actually it dampens volatility in many respects, if you think about it, because if there is, for some reason, a disruption to production in one area, first of all, as I was saying, gold production is well diversified, so it's not concentrated in one region. But if there was, you still have...
Right, there's a buffer,
exactly,
there's a buffer stock,
right?
there at all times.
And that's one of the reasons why gold is one of the least volatile components of these commodity indices.
Very interesting. Now, you also talk about there was a third point in there that you spoke about in the report, and that is that it's the most liquid of all alternative assets, right? When you talk about real estate, when you talk about hedge funds, when you talk about private equity or any other type of alternative asset, nothing comes close to gold in terms of liquidity, and that's very, very key.
It is key, and not only those traditional alternative assets, but also the new liquid alts. The new strategies that are accessing hedge funds and private equity and so on, but in a more mutual fund sort of a structure that are supposed to provide more liquidity and daily pricing and so on.
Such as the GLD, the gold ETF.
Well, what I'm trying to say is that there is a trend for liquid alts, but even those liquid alts that are more liquid than the traditional alternatives, if you compare that to gold, it really dwarfs, like gold dwarfs any other market. In part through ETFs, gold-backed ETFs that are very liquid when you compare it to any stock that is traded, but especially on the futures and the over-the-counter market that are very large and provide a ton of liquidity of the market, and you actually create less disruptions in terms of pricing.
Now, what has gold always exhibited sort of these three characteristics? I mean, it's very unique in how you describe it, because it kind of spans a lot of different areas that investors seek. They seek diversification, they seek outperformance, they seek a non-correlation to traditional assets. You have all that. Has this historically been the case, or is it becoming more so now because more and more people want to own gold? In other words, is it kind of taking on a different characteristic?
Well, what I can tell you is that most of our analyses are based on data going back to 1971, when gold started to freely trade in the market, right? When the gold standard and Bretton Woods ceased to exist or collapsed.
Basically 1971.
Exactly.
Yeah.
But so it really goes throughout times. It's not only about a particular aspect. I think that what is interesting now is that you get more diversification, in part because the market is not so concentrated on Western investors or consumers, but really the emerging markets, as they have taken a bigger role in all aspects of the global economy, but very much in particular with gold, creates a bigger diversification. You are less tied to what is happening only in one part of the world.
Right.
It's really a global asset.
Right. Well, fascinating. Some very strong points for investors to consider. Juan Carlos, thank you very much.
Thank you so much for having me.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.